everyone, welcome back to the Be Rich podcast. I hope you had a wonderful Saturday evening and you're feeling better on a Sunday morning. And as promised, me and Dhana are going to talk about South Indian Bank. You would have seen the previous video where we spoke about penny stocks and the dangers of penny stock. But there are a lot of you who keep thinking that South Indian Bank is a penny stock because the price is a stock. And in this video, I hope we'll clarify why South Indian Bank is not a penny stock and what is the difference between a penny stock and South Indian Bank. And also give you clarity. And a lot of you have been asking, Dhana, what have they been asking you, man?
So they are asking about, right now the price has been too low. So they are averaging around like 28 to 30. So the price is now at 25 to 26 it was trading at right now. So whether we can go inside to consider to average my South Indian Bank shares or whether I need to wait for some correction. It has a hope of it will be go up or down. We have the problems with it. And they are have doubt about that. Oh, it was also a penny stock. So it was trading at a 2 volume. The price was low. So whether it was a penny stock or not, we need to understand. And it has a value or not, that's the main thing.
Correct. Okay. That's a good question. Yeah, let's talk about the price, for example. South Indian Bank during the COVID times dropped all the way down to 5 rupees. Okay.
Yeah, sir.
And that's where it's been getting into everyone's radar. And everyone started talking about South Indian Bank when it was at 4 to 5 rupees in the middle of the COVID times. And it stayed there. And for the longest time, it was below 10 rupees.
Yeah.
Now, in India, anything below 10 rupees or even 5 rupees a share is considered to be a penny stock.
Yes, sir.
But market capitalization of a penny stock is usually less than 1,000 crores. Okay, they're very small cap companies.
Yes,
and second is they're not very liquid, meaning the trading, if you see in that stock, will not be much. Not many selling and buying will be happening in that stock. And another thing is there's also high volatility in the stock, meaning the price fluctuates dramatically. Today it's 10 rupees. Suddenly you'll see tomorrow it's gone to 15 rupees. Then day after you'll see it's gone to 6 rupees. So you'll see that
the volatilization will be much bigger.
Yes. And most importantly, they're high risk. I mean, these companies have very uncertain financials. We do not really know anything about what business they're doing, who the owners are, and there's no transparency in it. And they'll be very new and they'll be struggling in their business. And investing is it's like a speculative market, meaning it's like someone who's joined your college new. A new kid has come and joined your college this year. You do not know if you should be friends with him or not. First day, first time you're meeting him.
Correct, sir.
And if I ask you, is he going to be your friend? Is he your best friend? You'll be like, hey, I don't even know him. I just know his name. We just said hi. He looks okay. I don't know. So
but it takes some time.
Correct. That is what a penny stock is. So South Indian Bank, other than the first point, it being low in price, it's not low anymore. It's not in penny stock range anymore. That time it was in penny stock range. Only the price was. Market capitalization, it was not.
Market capitalization of the South Indian Bank is 17 billion rupees.
Correct. And then you look at liquidity. The high volumes of buying and selling South Indian Bank happens every day.
Yes, sir.
And it's not volatile. It stays range bound. It moves a little bit up and down, but it's not dramatic. You don't see South Indian Bank going from 7 rupees to 20 rupees and from 20 rupees back to 7 rupees within 3 days, 4 days, 5 days.
Not fair, it was not happening.
Yes. It takes very long time. And it's a highly regulated bank. It's a big bank in India. The RBI has eyes on it. SEBI has eyes on it. And it's regulated. It's not one small unknown bank which nobody knows about. Its branches are all over the place. And it's spoken about and everybody knows this bank. So that's why it's not considered a penny stock. Now let us look at the interesting thing about price. In a bank, what do we look at? We look at price to book.
Price to book.
Yeah. So let's look at price to book for 10 years. This is how the price to book has been moving. You can probably share this on the screen.
Yes, sir.
Okay. The highest it goes to price to book is 1.6, right? And then it keeps dropping. During COVID times, this is when it was very valuable because it dropped down to 0.3. Yeah. But if you see the mean for 10 years, it is at 1.8. And right now it is at 0.8. Yeah. So it's not overvalued.
Yeah.
It is not undervalued. Now the question gets to everybody's mind is, sir, if this is true, if this has been happening, why for the last 10 years the price has not gone anywhere?
Yes, sir.
If you see, except for that COVID turn, if you see the average price is around 20 to 25. Yes. Is where it is. Why is it that? The reason that is, if you go and see the corporate action of this bank, this is when it gets interesting. 2004 rights issue, right? And you can see, go into rights column. 2017, they offered 1:3. 2024, you remember this, we did videos about 1:4. Bonuses, they issued a bonus in 2008, 1:4. They constantly keep rewarding investors. Whenever there's build up in the system, they give extra shares. They're making the company more and more liquid. Imagine MRF. suddenly they reduce the face value because these guys also dropped their face value.
Correct.
They did a split. In 2010, it was 10 was the face value. They made it 1. So every 1 share became 10. So imagine they did not give bonus. Imagine they did not give rights. Imagine it was at the face value of 10. South Indian Bank share price will be
around 200, 300.
Even more. Correct. So they keep diluting it. Why do they do it? Allow more and more investors to come and join the family. Right. Like MRF has built a high wall. Doesn't want anybody to come. In terms of South Indian Bank, they want investors to come. They want to be liquid. They want their stocks and shares to be traded. So they made it more and more accessible. So this is the reason why if you see the South Indian Bank shares, it's like 20, it just stays, it's been range bound. Even if you push it to maximum, okay, from 2010, if you see 14 rupees, now it's gone up. So is it a time to buy South Indian Bank is what your question is. Let's say you have an average.
We need to average or
not. Let's say you bought it at so-called peak. You bought it at...
Sir, peak was 37 to 39, sir. At the time, it was a rights issue.
Correct.
So they are considering at the time.
Correct. So this is a great bank to own if you're looking at it long term. Because the way, if you see their history, they keep rewarding investors.
Yeah, correct. That we are discussing right now.
Yeah. So they're rewarding. Every few years, they're doing some preferential allotment. They're doing rights issue. They're doing bonuses, right? So they are rewarding investors. It may not be in terms of capital appreciation, but they're giving it in terms of stock and dividends. Because the dividend payout has also been good.
Yes, sir.
So it is a great share to own if you're looking at it as a value investment for a 10-year period. If you are looking at a speculation, saying, okay, like a penny stock, I'll buy it for 28 rupees. It will go to 35 rupees. I'll dump it. I have 20,000 rupees right now. So I'll buy. Lock in 20,000 rupees worth of South Indian Bank. I think next year it will go to 30 rupees. Then I will trade for 30,000 rupees and swallow 10,000 rupees. That will not happen.
Okay.
Because you can't time such things. Will it go? I don't know. Maybe it will. Will it go to 7 rupees? Yeah, possible. I put 20,000 rupees because it's happened in South Indian Bank. If you see the price chart, right? It has moved. If you see 5 years time, it moves quite dramatically over a period. So I can be right now at a high, it's come down to this. It could be going all the way down to 10, 15 rupees also. It's possible.
Yes, sir.
If FII, some move happens in Fed, and the FIIs decide to dump because let's look at FII holding in this bank. FIIs own 13%, which is quite a huge percent.
Yes,
imagine if FII decides to dump 13% in the market and walk away from South Indian Bank. You're going to get really slapped on the face.
Definitely it will come below the 20.
Yeah, but if the bank is sound, the bank is safe. Because the public holding in this bank is what? 80%. 81% is held by Indian public. So the bank is very safe. But if you're trying to speculate and make some quick money, then this is not the play. This is not a penny stock.
Yes, sir.
If you're a value investor, please consider it.
Yes, sir. And right now, it has been analyzed that Q1 results of financial 2025. I just mentioned that, and then after that, you will clarify that it has a value or not. Because we already discussed it has been a valuable stock, but right now we are discussing the return on equity also increased 110 base points, sir. Return on equity also increased year-on-year growth. It also increased to 12%. Net profit also increases. 45% was increased. And profit also increased, sir. Previous year they make the profit of 202 crores. Right now it nearly to 300 crores. And non-performing assets also declining. And the retail deposits also grow. 7,000 crores was grown up. It was nearly, right now, the huge amount of retail depositors are been into the South Indian Bank, sir. Nearly 1 lakh crore are in that. NRI, sir, non-residential Indians. So they are also deposit their money. That also increased. 1,700 crores to, it has been moved to 30,000 crores. And the corporate segment, they are giving the lending. The advances also moved up, sir. 27,000 to, it has been moved to 34,000 crores, not in your money. It has under the crores. And the personal loan also increased, sir. 2,000 crores to, it nearly moved to 2,400 crores. 19% of increase. And the gold loan portfolio, that also increased. It is a huge number, sir. Nearly 1,839 crores. It has been moved to 14,000 crores. So it was a huge number of growth, and they are also tied up with the Tata Motors. They are providing the financial solutions. So this right now happened in the last years.
But unfortunately, what all you said is all good news.
Correct.
But people do not look at all that in the buy. See, if you look at book value itself, here's the book value of South Indian Bank, over 20 years almost, right? It's like what? Less than 20 years, little less. It's 2006 all the way to 2000. You see the book value, how it's increasing. If the only way the book value increases, more and more people like this bank, more branches are opening, more deposits are happening, more loans are given, and rightly, like you said, in the last column, see the huge explosion.
Yes,
book value has gone up by 33. From it's been hovering at 25 and now it's seeing growth. So the bank is growing, the bank is doing well.
Yes, sir. That's why I came up with the results.
Correct. But our Makkal do not look at all this when they buy. They only look at price. Right. And that is the wrong way to buy it. This is why I say the only way you can look at it is price to book. And if price to book, you look the median, right? For 10 years is 8. But if I put it to maximum, it is at 1.1. So at that point, if I'm holding for maximum, let's say I want to buy this for my grandson. Okay, he's only going to use it 30 years from now. It is a value buy.
Very valuable buy, sir.
Yes. But we don't look at it like this.
Correct.
And what the problem is, it hurts. When you buy it for 30 rupees and you see it going to 25 rupees, it hurts.
And the fear also coming.
Correct.
Whether I need to hold it or whether I need to...
So fundamentally nothing's wrong with this bank.
Fundamentally nothing wrong.
Yeah.
Correct.
You may see from the 30 rupees even go down to 15 rupees, even 12 rupees. But doesn't mean there's something happened to the bank. Like I said, the FIs are holding at 17%. And if they decide to dump it, it can happen. Price can move.
But as a value investor, I will be like...
blood in the market.
Yes. I will definitely enter.
But it takes courage.
Courage.
Yes, you see it in the movies. You know, the villain pulls out the sickle in his hand. Immediately, we cheer the hero to pull sickle. But if someone in front of us, some rowdy comes and he pulls out a knife, immediately our instinct is to turn around and run for our life.
Because that is a cinema. That is
correct. So same thing applies here. Vinod sir, you can talk. Dhana, you can talk. This is all cinema, man. You're talking about hypotheticals. You do not know the pain I'm feeling.
Seriously, I also have pain and feeling.
Me and Dhana also buy.
Yeah.
And we encourage you to be a little brave. But like we always say, assess your risk appetite. Where are you in life? What is money which you're willing to leave on the table? Take that decision carefully and methodically. Don't get excited. Even if tomorrow you see South Indian bank prices drop, doesn't mean you should immediately go put your whole house savings into it. A lot of you are doing this and we repeatedly keep telling you, go at Tiffin coffee levels. Even if there's blood in the market,
go with the Tiffin coffee level.
Correct.
That also we are making one video.
Drink that blood in the market with a straw, not a bucket.
Bucket.
Yeah.
Safely.
Yes. So keep this in mind.
Yeah, sir.
Anything else you want to add?
No, sir.
Okay.
I think it will be a clear explanation.
I hope.
Fundamentally, we are explaining many of the things. I
hope. And do remember, me and Dhana are not SEBI registered advisors. This is not advice. This is just our thought. And we're sharing it with you because a lot of you have similar thoughts. So we share our thoughts with you. But if you are interested in buying these kinds of things or investing, please do get a SEBI registered, like I said, SEBI registered advisor, and do the needful and follow their advice. Do a risk assessment so you know what your appetite for risk is before you do any of this. Thanks for watching it. I hope you have a wonderful Sunday. Let's get ready to work again tomorrow because it'll be a wonderful week ahead of us. Thank you and see you in the next weekend. Me and Dhana are signing off now.
Thank you.